Hey, this is Derek. I'm doing another one of these learning stochastics. Doing some research, looking at some charts, making a short video. So what I wanted to do today is maybe compare fast stochastics and slow stochastics. So I have a daily Apple chart here. You know, This is going back to February. Shows the volume, which I always like to see that for some kind of confirmation. And then this is fast. The first one is fast stochastics. And then this is slow. Let me reset this to so I'm using Thinkorswim, TD Ameritrade. I think a lot of people. I avoided this platform for a long time because I thought it was like the space shuttle, the cockpit of the space shuttle. There's so many things to control, but I realized that was just how little I knew about the market. So I have a different attitude now, which is continue to learn, and I still want to stay simple. I don't want to get too bogged down with bells and whistles, but at the same time, I think indicators like this goes back to the 1950s, George Lane. I've been doing some research on my own. So anyways, let's just dive in. So what I wanted to do today, just because it's a Sunday, the market's not open, is I want to spend a little bit of time, digging around, looking at some charts, and looking at the signals that are given between the fast and the slow stochastics. Because essentially the slow is a moving average of the fast stochastics. I mean, it's basically we're taking the price over a certain time period and we're averaging it, and then there's a smoothing mechanism, and we're trying to actually figure out where our stock or underlying is in that time period. Are we overbought, oversold? And again, it's just a feature. It's just an oscillator that shows us momentum. So it's it can't be the only thing you use. I think what I'm starting to find is that it's still really critical to combine this with support and resistance. And what I'm trying to figure out for my own trading is how possible it would be to use this on shorter and shorter time periods. But let's look at some daily charts. So I like to go high and low candles, usually ignoring wicks. This is kind of interesting though with the wicks. So here, this is support, some indecision here, resistance, and then it stays resistance. And now let's see if that's actually confirmed. So it looks like this level was resistance up here. We get a signal. We get a fast signal here. This is interesting. We almost got a cross, but we didn't. Because some people actually believe that the slow is more reliable because you get less signals that they mean more. So with the fast, we got a signal up here. The slow, we got a signal here. Right in that same range. And the slow actually would have kept you in until we cross again here, which is, this is, I'm looking at Suncor Energy, just toss that in quickly. So this level is about 30.29. We would have been in at ballpark 32.79, so $2.50 for that move. But notice the frequency of these symbols. I mean signals. Short here, cover in this congestion. I'm not sure you'd make anything. Short again here, kind of at the same level, but then maybe cover right there. So you'd only get this small piece of it, maybe 33.28 down to maybe 32. So yeah, let's go back and look at Apple. Starting with these daily charts, partly because just want to see, alright, so price level. You could see that it's showing me the high anyways, but I like to box it and then see what else I can see. So we have this level going back to March. We have that secondary level, which is interesting. So we had this high, a new high after earnings, and then a big red candle. So obviously that's a big sell-off. Here's the dividend payment. People are back in. And then this right here shows us that we couldn't punch up above that price level again, 133.01. We back up a little bit, see what that looks like. Yeah, I mean, looks like a big head and shoulders to me. Shoulder, head, shoulder, and now we're heading down. But that's not what we're talking about. We're talking about stochastics. Let's back this up a little bit. Alright, so I'll grab it from maybe from here, because that'll show us. So interesting that we bounced there, because that's a support. This has already given us, the fast has already given us a buy signal, but that could just be on the new candle. Slow has not. But let's look at this. So fast, we got a signal right here to sell. And you could see from this wick that even after this day was over, there was probably still some buying on the next day on this bounce, and we continued to sell off. So this was a pretty solid signal. We don't actually get the slow signal until this candle following day, and then covering here a day earlier. So yeah, slow would have had us in on this candle and out over here. Maybe sort of more patiently traveling through this. And then this one's interesting to me too. So here's a signal here, and then there. If you look at the difference, fast had an oversold signal earlier right here. So yeah, the sort of things I've been looking at, I've been reading about, or the way, just I'm curious how other people use this, and maybe you are too if you're here and you're watching this. You know, obviously, like, you know, you could just, some people are, you know, forget all the lines. They're, you know, in this area, overbought, 80 and above, as close to 100, that's fine, just sell. Oversold, just buy, you know, basically like buy on the oscillation. Obviously, I would never do that. I think that's scary because you don't know what the actual long-term trend is. You don't know what the support and resistance levels are, and to me, that's just a little too random. What I've been looking at, obviously, is buying these crossovers, and then the other thing that a lot of people talk about is finding these divergences where the signal's actually showing you something different than you're seeing in the chart itself. Let's look at China. Here's the iShares FXI. And again, this one's tricky, you know, as I said before in another video. When there's geopolitical risks and headline risk and other things going on, and it's a basket, it's kind of hard to. I think this is something I would definitely try to trade on a shorter time period, just because, you know, you could get zonked by, you know, a news headline. All right, so I already have some support and resistance in here. Those are highs and lows from probably a different time period, so let me pull those out. So for this specific time period, there's my low, here's my high. That's a really interesting line right there. So notice here before this gap up, kind of came to this spot, and then we had this gap for a few trading days in June. This was support. We actually came down to it. We kind of hovered here for a while. We bounced. Once we actually broke below it, it's resistance here, and then we almost got a candle touch here. So I think even if these signals are interesting, so, you know, we got a cross here, which actually I bought call calendars to trade that day. I bought some December options and sold some Septembers against it, and that worked out. I actually closed out of that trade, so I'm not in that right now. But this signal, the slow, is actually interesting that it's happening now. But what, again, so here's an example of what I mean. Even if I took this trade and decided on the daily chart that it was worth, you know, taking a crack at this, I would definitely get out before this level to not deal with that resistance. Let me zoom in on the 4-hour chart and see what this looks like. Yeah, and here you could see the signals. You can see the time at the timestamp at the bottom. You know, a whole day later, we got the slow on the 4-hour time frame. I still see that. Here's the resistance. Here's that support area. Here's overhead resistance. Interesting. Let's look at Apple on the 4-hour chart, since we still have our levels in. We'll take it from the earnings high. Yeah, so we get this little bullish bounce here. Bullish bounce. But since the overall trend here is down, this could actually be a counter trend rally. So we might go up a little bit and then continue rolling over, heading down, considering I'm also looking at, it's a 4-hour chart, it's not daily, but looking at that volume. Yeah, interesting. On the 1-hour chart, we already have the overbought fast crossover. In the 15-minute chart. See, 15 minutes, even on the slow, we have an entry here. And if you got in on that 15-minute candle, you could put your stop down here at the low, 119, and then $123. Make $4 right there. It's an impressive move. And again, on whatever time level, whatever time period I'm looking at, I also try to add a few more support and resistance levels. You know, psychological numbers for whoever's trading that time level. And if we blow through them, then they don't matter. But if they hold, that's because you know, other people were looking for that level too. I'll buy Apple, but I won't buy it if it's over, you know, a certain price. You know, that's sort of the psychology of the market. You have to remember that what we're trying to see is the sort of the movement of the crowd. So yeah, it's interesting. I also have the plan to try to use this more with my futures trading. I don't really do daily. I try to do more futures scalping, and a lot of times I just do it straight on price level. So here's all of last week. Let me pull out again. I have drawings because I'm not doing. Yeah, let me do this. So I'm catching this candle over here without the wick. Like I said, because I'm doing support and resistance levels on whatever time frame I'm looking at, whatever section, you know, they don't always carry through, but that's fine. It works for me. So yeah, I don't know if, you know, there's a lot of movement in here. This is a 1-hour time frame. Let's go back. Let's go to 4 hours. Yeah. How about just this section here? Okay, so here's 4 hours. Sunday, Monday, Tuesday, Wednesday, Sunday, Sunday, Sunday. So here's 3 weeks. And again, downtrend, you know, 4 hour. We're up here. We trade around in this range, increased volatility. You know, this looks like almost like overhead resistance, 2076 level. Here it is, here it is, here it is. I don't call triple tops on 4-hour blocks, but it's an interesting level to me. And then it kind of holds. So what looks interesting, seeing these 2 points over here, these 2 points over here, to me that looks like, for this downtrend to continue, it looks like, if that's where we're going, it looks like this would need to break below 2046. So now, again, and I'm not, overall I do think that there are enough conditions to go down, but I'm trying to just use this to confirm, stochastics and just see if it's tradable. So I'm going to turn off extended hours and just look at the day charts. Monday, Friday, Thursday, Wednesday, Tuesday, Monday, Friday. So let's look at that. So these are 30-minute charts. A week plus an extra day. So this is what they mean about how the week, there's a lot of volatility this week, but we essentially sort of went nowhere. So we had a signal here. We didn't get the signal slow until the next morning. The fast gave us a short signal there, which is interesting. Slowed and didn't give it to us until the next morning. All right, so intraday, this will be the last thing I look at. So seriously, thanks for joining me to look at stochastics. As I continue to learn about this, over 80, down here, overbought, under 20, oversold. See, this is interesting. So here's Friday. Here's this low from Thursday. We just barely touch on this low. Just barely touch oversold, and then we get this overnight. And of course, news driven and short covering and weekly options expiration, all sorts of factors. Let me just see how tradable this is. Yeah, there's a, here's an interesting one. We get a signal here. We get a signal here to buy on the fast. Looking at a 5-minute chart. We get it here on the slow. Fast gets congested. Brings us in at 2066. Takes us out maybe 2069, 2070. Not bad, 4 points. And then for slow, we're in somewhere on this candle. It's a big candle, so anywhere from 2067, 2068, and then we're out up here, 72. Yeah, we could still make 3-4 points, maybe better depending on entry. But yeah, this is the most interesting takeaway, is that because of the slower, because of the smoothing and moving averages, on the moving averages, we're getting less signals, but they seem to they seem to confirm. The trick is, well, obviously, when I want to make a couple videos looking at this when the market's actually open, but the trick is waiting for the candles to close to get confirmation, because as these lines are actually being drawn, they can look pretty confusing, because until the candle's finished and the numbers are in, it's really hard to plot this out. So I think that's maybe what I fell victim to before. So, all right, well, thanks a lot for joining me, and please subscribe. We'll continue to learn about stochastics, fast and slow, and other trading research strategies, ideas, retail investor to retail investor. All right, have a great day.